Good afternoon, guys. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, August the 21st. And I've got the S&P up here on the chart. You guys know I like to start with that. We had what turned out to be a kind of a dull day after a big opening today. We got a big move overnight in the ES. Yesterday was kind of a very weak day. Big pop at the open, but then notice open here, close here, same thing all day. This was the excitement of the day. This was the FOMC meeting, the Fed minutes from the last meeting. Initially went down. Typically we pop up and then sometimes it's faded, but we went down, came back up, and just kind of chopped around. Came back down again. Notice this level, and if I can draw a straight line, and that level held, and then we kind of went into the close here. So overall, kind of boring, boring day. I guess it was okay for trying to scalp a little bit, maybe, but anyway, that's not what's important. What's important is we go back, say, 5 days, and well, actually, let's go back 10 days. That gives us a better view of what we've been dealing with here. So as we can see again, are these coincidences? Looking at these levels here, we've been kind of range bound between the top and bottom here. I suspect we come back up here. We do have a level here at 29.42 we have to take out, and then of course we got 29.50 right on the other side of that. And what has been working, you see this volatility down here? It's up and down and up and down and up and down, and what I've been doing is selling premium as we kind of bounce around here. Iron condors and credit spreads on either side. I just did a class on that last week, and we did live trading last week, and we had some great trades and all that stuff. But that stuff's still working, and not only with the S&P. We did a trade in Lulu, we did a trade in Ulta, we did a trade in Netflix, did a trade in Google, and all those are working for for this market, and I suspect they will continue working until we break out. And that is the next big question is, where do we go from here? And let me put this on a little bit longer term time frame. It puts it more in perspective here. In fact, let me show you a chart real quick right here. Okay, so here is, this kind of sums it all up where we are. If you look, this is an SPX Fibonacci Queen did this for me, SPX daily chart. So we are, that's that 29.50 level, which is kind of right here what we're running into. So we may run into this and fail, maybe a couple times before we ultimately get through that 29.75 or higher, or we could fail and come all the way back down. So we kind of, we might be in this kind of zigzag pattern here for a little while, but this is a very critical area. And if you remember, on one of the nightly videos I did several months back, or not, several weeks back, sorry, and it was right, I think it was right here, and I said don't get too excited, because when we remember, we were talking about the this sell-off. What worried me about this sell-off was the length of time. Remember, I was saying the last sell-off from here to here took a long time to get there. This one was basically vertical. It was basically straight down, and we immediately ripped higher. And I said, when that happens, when you sell off like this, over here, and you rip higher, and then it fails, and you rip higher and fails, and rip higher. And if you notice, look at this similarity here. Rip higher, fail, the W pattern. Look at this. Fail, higher, W, same thing. And that's the chop that I've been talking about in trying to sell that elevated volatility. So, again, that's one kind of thing to be on the lookout for, but just be really careful, because we're up against it here, and it as it happened here, we broke to the downside. We could absolutely break and come back down. I think that's a reasonable level down here, or we could break to the upside, and we're not that far from all-time high. So we're kind of in limbo land here. So what's going to make the difference of where we go? And let me zoom in a little bit here, and that'll kind of help. Doesn't look too bad there, does it? What is going to make the difference is we've got the Jackson Hole Summit on Friday. Actually starts tomorrow, but Friday we'll hear from Powell, I assume, and there's a decent chance that they may actually do a policy change there at the Jackson Hole, which would be very unusual. I'm not saying there's a big chance of it. In the room today, I was talking about it, and I said maybe 30% chance, 35% chance, maybe. But I think they do not have to wait to a Fed meeting to actually do any kind of rate change, right? So be aware of that. If that happens, it'll be perceived as well. It will be dovish. It'll be bullish. We'll go higher. We'll break out of this range, and and maybe even take that out possibly. The other thing's China. Of course, we've got to watch for that. But the whole point is that where we are right here, we've been compressing into this again. We've got this classic pattern here, and does it fail, go this way or go this way? And until I'm proven wrong, I'm still pulling for the upside here. I think that's what is more likely. Even if we get some downside, be careful, because short covering can rip everybody's heads off with one tweet from Trump saying progress made on China, or the Fed says we're going to step up what we're doing, or we're going to act faster than we've anticipated, or something like that. We're going higher. So be careful. That's what I'm saying. And try to position either way. I've got I got one, not very large because I'm pretty flat, but I've got a hedge on the downside, and in fact I'm not even filled on that yet. I'm trying to get filled on it on the downside, and I'm also looking to place shorter term trades to the upside. So that's kind of my thing, is in looking at this over the next couple of days, couple of weeks. So for now, just be light, be nimble, and keep an eye on everything, and hope that makes sense and helps. And I will see you guys at the next update. Thanks.